Hello everyone, this is a video in which we are going to analyze the Banknifty charts using market profile. So in essence what we're going to do here is look at the auction and the market structure that has developed over the past few days so that it will help us to figure out or maybe analyze what could happen in the forthcoming days and the week. Okay, so first thing, we are not going to get into too many terminologies with respect to the market profile. We will just look into the basic market structure using market profile, and it is a really strong tool if you understand the basics of it. You don't need to be too fixated to certain terminologies that are used quite often in this field, that is the market profile. So to start with, our first aim when we look into a market profile chart is to see the balance areas that are developing or have developed in the past. Okay, now the market profile, the very basic underlying concept in market profile is that in fact it's auction market theory, that a market moves from a state of balance to a state of imbalance, then again to balance. So what do I mean? So before a market moves or trends, as we call it, in a particular direction, it likes to consolidate so as to enable itself to move in a direction in a better fashion. Okay, so this theory, auction market theory, is not only valid in the stock market, it is there to be seen in our day-to-day lives as well. So the first thing we do, as I was just saying, is we draw the balance areas. Okay, so for the past week, as you can look here, is it's just a simple way of understanding what the market or the auction is doing. Okay, so these are 1, 2, 3, 4, 5 and 6 days in which the market is trying to balance. Okay, now these are the two anomalies, or the 2 days in which the market has tried to move above or auctioned above this balance area. So we just go into detail of everything one by one. Okay, now we'll go further backwards. Okay, so let us understand what was happening before that. Okay, so the market moves from as we discussed, a state of balance somewhere here and moves down, and then is trying to balance here. So this is where the market stops or balances. So the other area of balance that we can draw is something like this. Okay, so this is the bigger balance area within which we have just drawn a smaller balance area. Okay, and let us color this something different so that it is visible and better visual. Okay, so this is one big balance area within which there is another one, and what we can see here is that the market tried to auction twice, as we can see, that is once here and the other time over here. Okay, now before we move further, let's go back a little bit more. Okay, and then we'll go deep into what has been happening in the latest balance area. Okay, let's go back a little bit more. Why are we going back? So that it helps us understand. Even if you're not experienced enough, you can just go back and see what did the market do the last time something like this happened. Okay, now as is visible, this was state of imbalance where the market moves. Okay, and we see another balance area somewhere here. Okay, this is the one. Okay, and it's quite similar to the one we are ongoing right now. So this was another state of balance, and when the market broke, it went upwards and formed another balance area. So I hope you're getting what I'm trying to convey here, that it moves in stages like this. Okay, and of course just before this one there was this area. Okay, it moved from this balance area, formed another one here, could not get into here, and then simply remained within this area, then broke out, went upwards, remained in this area, and then came down. And these areas where this imbalance is taking place, these are areas which are generally called as rejection zones in our day-to-day terminology. And before that was again the imbalance state where the market kept moving up. So we'll not go that back. So these are the few balance areas that I've drawn. Okay, so now let's get deep into the recent action that has been going on. Okay, now let us enlarge this. Let us take this out so that we can see what has been going on recently. Okay, now when the market started auctioning, as we just discussed, into this balance area, the first time it broke out of this, it formed a P shape, which is quite common because it has moved out of a small balance area for the previous days, moved up. Obviously there were shorts, they cover, and then we have something called as the pre-profile, as a lot of you would be aware of. Just let me draw this. Okay, like this. Okay, this is a P profile. Okay, and then what happens after that is the market does try to, let us take this also out for now. Okay, the market does try to auction, just a minute, let me take this out. Okay, above, and fails and comes back into the balance area that we are talking about. So at this point we didn't know that there's going to be a balance area forming. At this point we know, okay, the market is taking a breather after it's broken out, and it has failed as of now. It comes back now. What happens on this day is there are some doubts sometime whether you should enter a long or not. So what is interesting is that on this day a long is viable only when you see the complete structure by end of day. So over here, when the market opens, it closes really at the lows. Okay, that is itself is not a criteria for not taking a long, but what generally happens after a breakout is a sort of consolidation. So what we could have or should have expected here is a consolidation somewhere here, but what does it do? It moves back. So this what it tells us is it forms a B type profile. So in essence, that means is what people generally refer to it as a long liquidation. But a long liquidation so early is I mean, it was just a day after the auction moved out or broke out, so it's too early to call it a long liquidation at this stage. Of course, after this broke out in the market, when there would have shorts that would have come into the market, but again they had no luck. They just, I mean, couldn't move the market any lower, and it's stuck here. So at this point, taking a short is again it doesn't make that much sense. Although the market does open lower, but there was no clue whatsoever over here looking at this structure that the market could go lower, because what we had is strong buying. So what I would have actually expected the next day to happen is something like this: the market opening here, not being able to cross this, and then going up, and then maybe I would have maybe looked for a long. But what happens is the market opens gap down. Okay, now this is another sign that the market at this stage was not ready to go down. In spite of opening gap down, it does rally up, closes up. Now again, if this would have continued on this day, where it finally ends up here, and in the A or B period there was a breakout sort of a thing where it crossed this POC, I would have definitely liked to go long. But what it does the other days again balances. So now at this stage I see 4 days within the same area, so I am sure that there is a balance area forming, and I am waiting. There are 2 ways to play these areas. Either you go short when the market is in the upper range, keeping maybe this or this area as the stop loss and targeting the other area. Okay, that would be a positional play, obviously. And so the market keeps ranging for the 3 or I mean almost 6 sessions here. Now another very good characteristic of a balance area is volatility. Okay, so there is no way you understand what is going on, and it is very, very difficult to predict for positional plays, especially in scenarios like this. Why do I say that? The market opens here. This is a breakout day, so this is quite a fair auction. Okay, this auction is also, I would call it fair, because this is the first time it's trying to break out. I mean, this is the second day of the breakout and it fails. This, understood, it comes down, it is a failed auction. Now look at what happens after this. It opens gap down, stays here. The next day it opens further down, okay, comes up and closes here. The next day it opens almost flat, closes right at the bottom of the range. The next day it opens flat, closes right on the top of the range. Then I think on this day it opens, let's see where it opens. It opens somewhere here, yeah, and again a flat opening, and or you can call a gap down opening, and closes at the lower part of the range. So you get what I'm trying to say. So it is very, very difficult to play this in present market conditions where the global scenarios are negative. But I don't see the weakness in at least bank nifty over here. I mean, even let's go to this day. Okay, this is the 13th of October. If the market was really weak, or bank nifty was really weak, there was a very good chance for the market to auction at least till this part, 38,400. Why do I say that? Because you remember the bigger balance area that we drew. This is exactly at the half, the 50-point range of that. Okay, so this is the range that we drew, and it is approximately 50% of that. So this was these POCs generally act as magnets. So this was the I mean, quite a legit target after it broke here and went here, but it just doesn't, it isn't even ready to go below this balance area, the smaller balance area that we're talking about right now. So this was the first sign that the market was not weak presently. Okay, the next day, again, this is unexpected. I mean, it breaks out of range and opens here. Okay, now although in general market conditions I would still be a little positive, but this day I mean, even now I am really suspicious of this move to continue. Why do I say that? This gap up is very difficult to sustain. There are two outcomes that I can think of that can happen in the future, in the coming days, and we will look into the past to see why we are thinking, or why we are I mean, I shouldn't call it predicting, or why we think it could happen. The first outcome, or the first likelihood of something that could happen is, let me make this, the first outcome that can happen is the market opens flat, it goes down. Okay, it goes down to this area, rejects it, comes back up, and forms this type of a profile on this day. Okay, a balanced profile, something like this in this area. The other day it forms like this, and then I would be inclined towards taking a long for going up. The other thing that could happen is that let's clean this. Okay, the other thing that could happen is that the market opens gap down here. Okay, let's draw that as well. The market opens gap down, goes down. Now what that does is it gives us a target area of somewhere here, 38,800. Why? Because now we can be sure that the auction that was trying to go up, if this doesn't hold, we are probably coming to this point. So as you know that in market profile, if an auction that tries to move out of balance, and if it fails, our destination trade generally becomes the other side of the balance area. So if the zone, I'll just mark it, if this is the zone, this is approximately to 38,200 odd zone. If this fails, we are likely to test these areas, and then most probably 38,800 is where the POC is. As we just discussed, it acts as a magnet, and we can see that hit. Now if that doesn't happen, the two scenarios that we discussed, the first scenario being it comes here, rejects, and moves on top. So again, what should have happened is it should have gone here, doesn't, so it indicates strength. So that means we are ready for an up move if it balances here. If it doesn't on Monday for any reason, or even on Tuesday for example, it balances here on the Monday, and then it starts going down on the Tuesday, so that becomes a trade with the stop loss of this point. Let me mark that for you. Okay, so that trade becomes just a minute, I'm sorry for that. Okay, that trade becomes this stop loss of maybe this part from here onwards, and this is the target. So again, that is a positional play, or option spreads, whatever you can take. That becomes the first one, and this area becomes the second one. Okay, now and the second scenario being this gets rejected and goes away. Okay, now this is, let me first delete this, then we'll go backwards. Okay, now why do I say I think that the scenario where this is going to test these regions, as of now what I can see is, I mean, there's nothing sure, but I think these regions, not this one, sorry for that, let me delete this. What I see is at least a test of these regions. Okay, this zone. Why do I say that? Because a breakout of a balance area with a gap up hardly ever sustains, and it's, I mean, 85 to 90% of the times it will consolidate before an up move. If a gap of this nature, that means you can see the gap, it's really huge. Okay, the gap up was really huge, so to sustain and just move away in one shot. So what we're going to do is go back, let's delete this, and see when the market has done or tried to do something similar. Okay, so we'll just go to our previous zones. Okay, so this is one zone where we can see the market tries to break out. Okay, and you can see what happens. Now this is something which is really good to take a trade off. It's not a gap up, the market opens, and within the A period, as I was discussing earlier, within the A or B period, it creates single prints and moves up. Okay, this is still a legit way to expect a long, although that doesn't happen. The next day market does go up but comes back within range, and this is what I was just discussing. This is a likelihood of happening in the forthcoming days for the present auction that is currently going on. Okay, this is what I expect to happen, and then maybe the market does move up if it doesn't touch the POCs down below in the current scenario. Okay, and what you see here is there is no gap up. Okay, it comes here, fails, goes back again, tries an attempt. This time it does open gap up, if you see. Okay, and it tries to test the previous POC and then moves up. This area is very different to what is currently going on, and here the confidence is really high to take a long, obviously targeting at least almost half of this zone to the upper end, and then you can calculate likewise. Okay, now let's go to the other place where we can see something similar of a breakout. You can just keep doing this, drawing balance zones and seeing how the market moves. Let's see this one. Okay, even this one, what does the market do? It doesn't open gap up in this case. You will see whenever the market does open gap up like this one, okay, it moves down into the balance zone, and we expect a consolidation of some sort like this. So the gaps and breakaway from a balance zone are very rare. Okay, they do happen, I wouldn't say they don't, but it is in cases where I mean the market is really bullish and piercing, I mean, all resistance without any I mean, without looking back at all. The present market conditions are not like that, so you have to play with trade with real caution. Okay, now this is another place where the market gaps up, comes down, it consolidates for 3 days, and again, see, this is just what we discussed. In the A period, there's a strong buying here, single prints, it clears the balance zone and moves up. This is another day, let's delete this, where you can take a long, okay, and you wouldn't be disappointed because this is a proper confirmation. Even if you would want to take an end of day and keep this a stop loss, you will be you will be good to go, because it is now given you a proper signal. There was no gap up where you get confused and it comes down and consolidates. All this has happened. So the the two steps that we are looking for when it breaks into a balanced zone and it gives us a high probability trade is: number one, whenever it breaks out, it gives us a consolidation zone and it doesn't fail. This auction has failed and come back inside, okay. Again, if something like this happens and it goes here, we have to look and we have to wait again. What we are looking at, if this has to succeed, it goes only till this point in the, we just discussed, in the A period, and it rips apart and comes back here, and then maybe the next day you can take a long. At this point, it's too early to take a long or a short for that matter, because anything can happen. If the global scenarios are changing, irrespective of that, our markets aren't moving down that fast. So we're just waiting for when everything improves and we shoot up at the moment. Of course, if we break this balance zone and we go down, then our targets become this area of the bigger balance zone, that is 37,500. As of now, 38,000, till such time 38,800 holds, we are good for we're waiting for a great or a good up move, okay. So hopefully this video was of some help in understanding the simple concepts in market profile. Until next time, bye bye.